We can't be an international military empire and have the dollar be the world's reserve currency and run a trade surplus.
Right.
Those things are mutually incompatible goals.
That system is not going to evolve easily, and it's not going to evolve, without conflict.
What we live in is a permanent boom because there's no requirement for real savings to finance the investment.
The top 10% of all Bitcoin holders own 99.97% of all Bitcoin in existence. So if we do have this scenario in the future where the dollar's value collapses and Bitcoin's value rises, there will be much greater wealth inequality in the United States than exists today.
By disintermediating dispute resolution from the state, you can spread access to justice further than you can currently.
We have good reason not only to be bullish on Bitcoin, but bullish on academic research about it.
Welcome everybody. We are here at the University of Austin with Natalie Smolenski, the Executive Director of the Texas Bitcoin Foundation, anthropologist, and Editor-in-Chief of the Satoshi Papers. And we're here at the Satoshi Papers Symposium, one of the first events of its kind in which we have academics across disciplines talking about Bitcoin. Please just give us maybe a little bit of a preview of what the event has been like so far.
So we've gotten together several authors of the Satoshi Papers from across disciplines. We have a philosopher, political scientist, economist, and an anthropologist, both here in Texas and around the world.
As a little bit of a preview for people who are maybe avid Bitcoin book readers, fans of the Bitcoin Standard and the other classics that are out there, what can they expect from the Satoshi Papers?
Well, they can expect a rigorous investigation of the relationship between individual, state, and society, specifically through the lens of monetary institutions. So they can look for a history of central banking, a history of money, an examination of competing theories of money and a proposed synthetic theory of money, an introduction that sets the stakes about the moment of political refounding that we are experiencing now in the United States, and how the federalist and anti-federalist debate may be relevant to our moment today.
Bitcoin was created in many ways as a response to the coming debt crisis, as a way of saying, well, look, what's the consequence of debt crises in general historically? The currency of that country gets devalued. This is that's what happened in Weimar Germany. This is what happens in Latin American countries. It's what's happened in Asia in recent decades and throughout history. In fact, the Roman Empire collapsed because of a devaluation of the Roman denarii. So throughout history, when governments get indebted, the values of their currency go down. And the whole idea of Bitcoin is that Bitcoin can't be devalued in the same way because there's no government that controls it. No person controls it. It is fixed by software to have a certain amount of supply. And therefore, in moments in time when people have less confidence in government-issued currencies like the US dollar, Bitcoin's value in theory should go up. So what I contemplate in this chapter in the Satoshi Papers is, what if that actually happens? So there are lots of people who say, I don't know about Bitcoin, maybe it won't work the way people think it was, but let's just stipulate for a moment. Let's imagine that Bitcoin works the way its advocates and cheerleaders and founders think it will, and becomes very valuable over time as the dollar devalues because of the debt crisis. What happens then? And what I argue about and worry about is that a fiscal collapse of the U.S. will be very bad for everybody.
Yeah.
And that the political environment that we'll be in, if there's a massive economic collapse of the United States, will be one in which the Bitcoin billionaires and other people who are very wealthy because they were lucky enough to be early in Bitcoin, they'll be targets for everybody else, because literally the 1% wealthiest people in the United States, the wealthiest households in America, own 27% of the wealth. So the top 1% owns 27% of the wealth in the U.S. The top 10% owns about 60% of the wealth in the U.S. When it comes to Bitcoin, those numbers are far more skewed. So the top 1% of Bitcoin holders own 87% of all Bitcoin in existence. Right. The top 10% of all Bitcoin holders own 99.97% of all Bitcoin in existence. So if we do have this scenario in the future where the dollar's value collapses and Bitcoin's value rises, there will be much greater wealth inequality in the United States than exists today.
Right. So in the chapter or here today, you sort of talked about a few things that we could do, and these are on sort of the bigger levels, federal government levels, and also I think everybody has a role to play in sort of, facilitating broader Bitcoin adoption. Let's say we want to get that, most people, you said it's 87% that have the majority of the Bitcoin. We want to change that number. What's sort of maybe a call to action for the listener today?
Yeah, I'd say there's two broad categories of things that we need to do. The first is everyone who works in Bitcoin or is interested in Bitcoin needs to invest in helping more people have a stake in Bitcoin success, whether that's convincing them to, save a little bit of what they can save in Bitcoin, whether it's to create new Bitcoin-related businesses that people can be a part of or invest in or work at. There are a lot of things that people can do to just make the Bitcoin ecosystem larger, more diverse, and more available and more accessible to a broad range of people. So that's category number one. And I'd say category number two is we need particularly the developers and the people who are very technical and who work on the software end of the blockchain to devise ways to make it possible for us to exchange US dollars for Bitcoin in a censorship-resistant way, meaning in a way that the government can't stop.
Yep.
Today, if I want to send you Bitcoin, basically the only way the government could stop that is for the government to shut down the internet.
Right.
So it's basically effectively impossible for the government to prevent me from sending you Bitcoin. But the government, as we've talked about, can stop me from buying Bitcoin using US dollars on exchanges and using other business. So the more we can convert US dollars into a blockchain-based entity, stable coins they're typically called, stable coins that are US dollar equivalents that are censorship resistant. And then on the internet, online, you can exchange stablecoin-based dollars for Bitcoin in a pretty seamless way. Then that's another way to make Bitcoin resilient to government censorship. And why does that matter? Because if the dollar to Bitcoin exchange can be censorship resistant, then the government is less likely to crack down on Bitcoin because it becomes harder to. If you can't crack down on the thing, you're probably not going to try as hard. You might say, you know what, we can try to crack down on Bitcoin, but it's not going to really work, so we might as well actually solve the debt and entitlement problem instead. Do the hard stuff rather than try to do the easy stuff that won't really work in the end.
Well, I think what I focus on is the fact that, or the ability for this kind of, I call them the Bitcoin bills, just like you call them gold bills. It retains the temporal structure of money and credit. So if you deposit money in our current system, you deposit money in a current account, you'll probably receive some interest return, and that money is, as it were, being put to work in some sense. It contributes to more money that the bank can lend out on deposit to other people. It's kind of fuzzy whether or not this money that you deposit represents an increase in your money holdings or some kind of investment. An investment is obviously a future good.
Right.
So that's a credit transaction. Whereas in addition to your money holdings is not a credit transaction. Like if you think that you've got $5,000 in the bank, that $5,000 is serviceable to you now, whether you use it or not, whether you use it in a year's time or now, it's servicing that present need. So this is a big disagreement between, say, like some of the free bankers, like George Selgin and people like this. They don't view this other third. So I'd say there's present goods and there's future goods. Money, in addition to money holding, is a separate thing to investment or consumption.
Okay.
If you have this system of bills, it means that when credit is extended, that is a definite investment, and it can't be mixed up with in addition to money holdings and vice versa. This would stop the impetus towards booms and busts, which many people hold emanate from credit expansion, which is all about this kind of muddling of what's a present good and what's a future good.
Yeah. When you think about that, I think, in the United States, we can think about that on one level of we've been through our booms and busts. But when you think about even in recent history of places where they've been through hyperinflation, whether that's Venezuela, Lebanon, Turkey, to know that might now be, or at least on a Bitcoin standard, that would no longer be a reality that people had to endure. Fairly exciting, no? I mean,
yeah. I'm not like a utopian where I don't want to give the impression that say we're on a global Bitcoin naturally would be a global standard, like a gold standard. And that can operate immune from politics.
Yep.
However, people have to live in meat space, and they're subject to power. So, you could have a Venezuela, especially given its history. You might have politicians who will try and stamp out the use of Bitcoin.
Yep.
But the rest of the world might be happily on a Bitcoin standard. I mean, there may still be kind of swings, industrial fluctuations, whatever, that aren't due to this credit expansion, which appears to be the biggest impetus towards it. And I think that essentially what we live in is a permanent boom. Whereas
Because of money printing?
yeah, because of the credit expansion, but ultimately it's because there's no requirement for real savings to finance the investment that goes on. So when you get the increase in output along the line, the savings don't exist to buy it, and things have to be repriced downwards. And then you get another wave of intervention where you obviously got minimum wages, so you got price controls that stop by law prices from falling. And I know a lot of this has to do with ideology. Like, imagine a world where you would be happy that your nominal wage is going slightly down. Like, it's very hard to...
It's difficult to picture. On a Bitcoin standard, then there'd be coins that are lost and all these other things that we don't factor in when it comes to, you'd be negotiating for a raise, but that raise might actually be nominally less Bitcoin a year later. That I think is going to take some time for our brains to adjust to.
And it's not necessarily like, I think this is why maybe the bill thing it's maybe a bit more like what people are used to, because we're not used to handling the money itself. Like we don't exchange typically cash or like bank reserves, which is the basis of the current system. It's an interesting thought experiment, but the thing is, no one can predict how a monetary order evolves.
Exactly, yeah.
But I was just trying to draw attention to the fact that there is kind of decentralized, non-bank issued credit, and this has circulated in exchange. And you can maybe imagine this with Bitcoin, and the benefit would be remove some demand from the block, from block space, which is obviously scarce, and it also allows production to be financed, which, if you just had on-chain Bitcoin, I don't really know how you do that. You just have to exchange equity.
A lot of what it is it's designed to kind of talk about the modern international monetary system and how it works, what the benefits are to the United States government of that system. But then also sort of baked into that are that there are these sort of inherent fragilities in the system. But also it's to provide historical background as to kind of how we got here. And that historical background, I think, is really important, because I think that when you look at how the system works and you see how it benefits the U.S. government, then you really start to understand that that system is not going to evolve easily, and it's not going to evolve, without conflict.
So let's dive in right there. Okay, so how do we evolve with maybe ideally the least amount of conflict?
Well, I mean, I think this is actually a role for Bitcoin, because the big problem that we have with our current system is that U.S. Treasury securities essentially serve as the global reserve asset. And so what happens is we have this sort of scenario where, as the rest of the world grows, they need to hold more reserves. The things that they hold in reserve are, U.S. Treasuries. But for us, those treasuries are debt.
Right.
And so the issue is that as the rest of the world grows, there's this ever increasing, demand for our debt. And so the very thing that makes lending for the U.S. or borrowing, for the U.S. government easy now is something that actually creates an inherent fragility in the system when the debt gets big enough.
Right.
And so the United States has been really protective of this role. You see this across political parties, across administrations. They're very protective of the role of the dollar. And one of the reasons that they're very protective is I think that a lot of policymakers see the only alternative as, well, if the dollar is not going to serve this role, if treasuries aren't going to serve this role, there's some other sovereign that's going to step in and provide this role. And because this system provides benefits to the United States government, they don't want to give up those benefits to some other sovereign nation. I think with things like Bitcoin, one of the potential benefits here is that Bitcoin as a neutral reserve asset could be a way of moving us, towards a more stable system. It could be some version of what we have now with just Bitcoin or something like that, or it could be a completely new system. But the point is, the United States doesn't have to worry that some other sovereign state is going to take those benefits away from them, because by going to a neutral reserve asset, there's no individual, there's no state that benefits from that change.
Yep. Do you think that higher ups within the U.S. government are aware of all these dynamics? We've also been in, what, a 50-year bond market, bull market. You know, people at the helm sort of have to understand that these things don't just last forever. Do you think that, I mean, we're seeing on some level with the Trump administration, there's some sort of acknowledging what Bitcoin is, there's some putting it on the balance sheet, there's some at least seeming embrace of it. Are they prepping for what is to come, you know, just judging by the way history tends to rhyme, if not repeat itself?
Yeah, I think one of the important lessons in the paper is to recognize that we got here on purpose, but we didn't get here by design. Right? And so the idea is that policymakers have taken deliberate actions to create the system that we have, but it wasn't something that they sort of envisioned. It just kind of happened through just following the policymakers' own self-interest. And I think you see this a lot with the Trump administration. They know that there's a problem. They've been out there talking about how this dollar-based system is not serving the United States well. And a lot of people are laughing at them. But the thing is that this system does serve the United States well, or at least the United States government, when debt levels are very, very low. But when debt gets really high, it's true that now all of a sudden there are all these potential costs that we have to worry about. And so you see them talking about that. You also see them supporting stable coins. And I think one of the reasons they're supporting stable coins is these stablecoin issuers are very, very large buyers of government debt.
No question.
And so the idea is that, hey, if we can have, some built-in demand for our debt, that would be great. And then, the embrace of Bitcoin, I think, is the same thing. You see them talking much more about Bitcoin. You see them talking much more about gold. And I don't think that that's a coincidence. I think that what they're trying to do is kind of create a permission structure for people to move towards more neutral reserve assets.
Yeah, absolutely. Final thoughts, maybe call to action. What do you hope they might take away from your chapter in the Satoshi Papers?
Well, really, I think we really need to understand how we got to where we are today and what the potential costs of the current system really are. But we also have to understand the challenges associated with moving to something new. It's not as easy as just, oh, hey, there's this better thing. We should just do that, right? It's actually really hard. There are a lot of, there are a lot of people who have an interest in the current system. There are a lot of people who want to protect the current system. And if you think about it from the perspective of the U.S. government, like, yes, they're making steps to try to maybe move a little bit away from the current system. But I think what they're really doing is, they're trying to keep the good parts and get rid of the costly parts. And so I think that, it's important to recognize that they have these interests, and we need to understand what those interests are, where they came from, and how we got here, because any path forward is going to require some knowledge of, essentially who's going to fight you in the future.
Yeah.
So I'm a practicing attorney most of my career. And so I came at this project from that perspective of dispute resolution. And specifically, the title of the paper is Advancing Dispute Resolution Beyond the State. And that's the lens that I brought to it.
I'm not going to lie. When I hear that, I even get a little bit anxious. And I'm sure other people feel that way as well, right? When someone is wrong, something happens to them, they call the cops, they call the authorities, they want the courts to sort this out. What does dispute resolution beyond the state look like?
Yeah, and that's, I think, the beauty of an open protocol like Bitcoin is that justice for all can mean different things to many different communities. And with an open system like Bitcoin, anchoring your outcomes from a dispute resolution process, communities can really build the institutions they want for themselves without, kind of a supra national, authority telling them what they can and can't do, or what's right and what's wrong. So that's really the beauty and what I was trying to explore, and examining existing solutions, online dispute resolution systems, arbitration systems, maybe business to business dispute resolution systems, but also even tribal systems that exist beyond the state currently, and then seeing how we can take the best of what's out there currently and anchor that again into Bitcoin.
Okay, so essentially people resolving these things on the smallest possible levels, community levels, as you said, tribal levels.
That's right. Yeah.
In your mind, what are maybe one or two examples that come to mind? How do you envision this?
Yeah, so there's, I'll give one kind of on-chain example that I explore in the paper, and then I'll give kind of an industry-wide example that's off-chain. If Bitcoin magazine readers are very steeped in the more cypherpunk elements of Bitcoin, they might have heard of BISC, which is a peer-to-peer trading network. No identity required. You can even use cash to pay. And they have their own dispute resolution system if parties don't pay or if there's some kind of mishap in the trade. And that system works really well because it uses Bitcoin's native properties, time locks, systems to essentially escrow the funds of the trade until the parties either come to an agreement and a mediator is appointed who's a volunteer from the BISC network and is incentivized through, I think BISC has its own token, but that's a different story, incentivized to provide these services. And then it can escalate up to an arbitration layer there in the BISC system. And ultimately, what will happen is the time locks fire and the disputed funds go into a system, an account that is controlled by the arbitrator, and the arbitrator will issue a decision. Now, the key part about this is the parties agree ahead of time that they're going to abide by the terms and conditions of entering into this trade, right? So it's something that ahead of time they're voluntarily engaging in this dispute resolution process. And that's another key feature that is absent in our state-driven dispute resolution systems. If we're within the jurisdiction of that court, whether it's state, local, the nation-state level, we're bound to use that system, and we can be dragged into that system whether we have agreed to be there or not.
Broader impacts on society. Does this make people feel more empowered? Are they paying more attention to the deals that they're a part of? Like, what changes in society as a result of something like this?
What I'm very hopeful about is that by disintermediating dispute resolution, that role from the state, you can spread access to justice further than you can currently.
Oh, interesting.
So the problem is, we live in the United States here. We do have the rule of law. We do have process, but that's not the case for, practically 4 billion people around the world who live in authoritarian regimes or just completely lack access to justice because their systems have failed. And so in that instance, I think building tools for communities to create their own justice systems and anchor it into something like Bitcoin that is permissionless and that can allow anyone to access money, right? Now we can use that to allow anyone to access justice as well.
First, it's called What Satoshi Did. But it's not so much about Satoshi's accomplishments as a software engineer or as a monetary designer or as an anti-authoritarian activist, but instead what he did at the social layer of Bitcoin to build a community of users that would bootstrap into a kind of social institution, which would require his departure as a condition of success. And we go through all the different ways that Satoshi built this new social institution, a new kind of social institution, and we call it a feral institution because it was initially engineered and centrally managed. And although at the technical layer one, there were and are no leaders, insofar as Satoshi remained, he was something like the unofficial czar of Bitcoin. And in order for Bitcoin to be truly leaderless, he needed to depart. And in his departure, he activated this final condition. He flipped the switch for Bitcoin to be truly feral.
Just quickly want to touch on that. You did mention it in your talk, reputational risk.
Yeah.
Why is there so much reputational risk associated with talking and writing about Bitcoin in academia?
In the defense of many academics, academics move slow. Peer review takes a long time, and it's easiest to hyper-specialize and work on existing problems. And so as a result, academics are often several years behind the curve, especially technologically. And so that's one reason for explaining why there are so few academics working on Bitcoin and why it seems strange to them. And when I talk about Bitcoin in academic institutions, the reflex is to think that Bitcoin is niche, that it's new, it's not a big deal, but that's just because they don't know. And so I imagine as time goes on, as we lay the groundwork for academic research, as grad students start to write about Bitcoin, the Bitcoin academic community will grow. Now, there are other reasons also which explain why Bitcoin has a less than stellar reputation among academics, and that largely has to do with its associations, which aren't totally fair, that Bitcoin is this kind of right-wing or alt-right alternative money that is hell-bent on demolishing institutions and reducing trust. And of course, we know that Bitcoin is more of a thermometer, that insofar as people do lack trust in their centrally managed currencies, Bitcoin provides an escape hatch. They can find recourse in it. Whereas we know that Bitcoin is a thermometer, many academics think of Bitcoin as associated with Donald Trump and as a kind of weapon of destruction.
Understood.
Yeah.
Well, I want to end on a high note.
Yes, let's please.
So I think you just mentioned something about grad students potentially writing about it.
Yeah.
Eventually, right, you're going to have people coming through the university system, students who hold Bitcoin, and there's going to be some incentive to say, hey, you know, there is something to this. It's benefited me on some level. Is that sort of personal connection to it as more and more people have that? Does it just get more ingrained in academia and in other facets of life as well, just because it becomes a bit more normal to have, much like people using the internet?
Yeah, I think as Bitcoin sticks around for longer, its reputation as being lindy will lend it some credibility amongst people that it's not going anywhere. I think many academics, especially economists, still think it's going to zero, and could happen. So I have to say that as an academic, but it seems fairly unlikely to me.
We're trying to stay bullish today. Craig,
Yes,
you know?
yes, of course. But I think as it sticks around for longer and younger people start to work on it, I do think that we'll have a kind of snowballing effect in academic work. And this is something that the Bitcoin Policy Institute is doing in supporting academic research. And a couple things in particular excite me about academic work on Bitcoin. The first is the Bitcoin Research Institute at the University of Wyoming, which will launch hopefully this fall under the directorship of Bradley Rettler, one of my collaborators, and Andrew Bailey, my other main collaborator, is supposed to join him in the not too distant future. We have good reason not only to be bullish on Bitcoin, but bullish on academic research about it.
There's a difference between value-adding work and administrative overhead.
Okay.
And I would suggest that much of our apparatus of government at all levels today is overhead. So of course people don't have the time or the energy to engage in endless overhead.
Right.
But we each, as citizens of a republic, bear the responsibility to think and to steward and to raise our hands to serve when we are called to do so. If we don't do that, others will do it in our place. And we have in effect forfeited our right to govern ourselves.
Okay.
And so that is the question. The early founders of the United States, I mean, being a politician wasn't their first-time job, or their full-time job. They were farmers, they had businesses, they were otherwise employed. Governing was a specific activity that they were called to do for a specific period of time. That also reflected the much smaller role of the state in their era.
Right.
And so I think one of the major questions that we have to ask is, what have we lost in the professionalization of politics as a career, in government as a full-time job? Does this, in fact, jive with being a democracy? And if not, what steps can we take to begin maybe pruning back some of the tasks that the state has arrogated to itself, that are not enumerated in the Constitution, that the people can take back for themselves?
One of the things that's been surprising to me as a political reporter is I've been speaking with a lot of people in government, both at the state level and the federal level. And I think there's more Bitcoiners in government than most people think. And now we have, strategic Bitcoin reserves, and we have Bitcoin sort of becoming a bit more ingrained in the U.S. government. Do you think under this administration we're sort of moving in a good direction, generally speaking?
The main question for any political administration, this one or future administrations, is to what extent is it able and willing to make trade-off decisions?
Okay.
Politics has been the art of trying to get everything, and you can't have everything. Certainly not on a long timeline. We can't be an international military empire and have the dollar be the world's reserve currency and run a trade surplus.
Right.
Those things are mutually incompatible goals.
Yep.
We cannot have liberty and justice for all and a state that has visibility into everybody's financial transactions.
Right.
Those are mutually incompatible goals.
Yep.
And so what politicians do is they try to pretend that there is no trade-off. And it is up to the American people to stop accepting that, to begin to call out, no, we have to choose. And our values as a political community will guide us in what we choose to prioritize and what we just trade off.
Yep.
So these are the decisions that we have to make together as a people.
Yeah. Well, I think that's a perfect note to leave it on. Natalie, thank you so much for your time.
Thank you.
Thank you for arranging this. Thank you for getting the Satoshi Papers together, for acting as editor-in-chief. We sincerely appreciate it. Thank you.
Yep.